everyone. Angus, one of the directors here at Prime. I'm again joined by Nick from Evidentia, who forms part of our investment committee. G'day, Nick, and welcome again.
Thank you very much. Pleasure to be here, and thanks for having me back.
So what I thought we could do today, Nick, is just start to, scratch the surface of ESG investing, which is essentially the process that incorporates environmental, social, governance into a criteria of an investment process. And I guess why it's become more important is I think the shift towards sustainable business practices, consumer behaviour, investing is likely to be one of the biggest or bigger pervasive global trends that we'll experience over the next few decades. So I think, and again, that's just been bubbling away for a while now, but with the acceleration of the pandemic and climate change, environmental concerns, we know we had the bushfires only just a couple of years ago. I really think it is becoming rapidly a tipping point and a talking point. And we're also seeing this a lot on the political agendas. Does Scott Morrison go to Glasgow? Does he not? So I think there's been a lot of positive development towards a net zero world. But I don't think we're going to try push an agenda or anything today. It's more just give everyone a bit of an education piece around what ESG investing is. If people do think it's complicated, how we can help them understand and get a better idea of potentially how they start to get that type of exposure in their portfolio. So, Nick, can you give us a bit of a rundown on ESG and what we think it is?
Yeah, thanks, Angus. And all the points you made are really valid. And I think just the whole concept of values-based investing is just becoming ever more relevant to whether it's personal investors, institutional investors, or family office or private wealth investors. So in terms of your question, Angus, ESG, and what does that stand for? So environmental, social, governance, and underneath environmental, when we talk about the things that surround that concept, it's looking at everything from climate change, natural capital, pollution and waste, environmental opportunities. Social is a really important one because there's been a lot more emphasis within the industry and the community over recent years, and particularly given some of the corporate, failures is a hard word, but there's been some really public exposure of some bad corporate behaviour. So when we talk about social within ESG, it seems like the treatment of human capital, product liability, stakeholder opposition, and social opportunities. Then over to governance, that's things like board composition, so diversity on boards, gender diversity is a big one, remuneration, and also corporate behaviour.
And I think that's almost one of the first things that I discovered when looking more into ESG and what it is and what's sustainable investing. I think people pigeonhole it a little bit, and it's always about climate change. It's always about the environment, but it's way more broad than that.
That's true.
I think the UN have 17 sustainable development goals, around poverty and hunger and well-being, education, equality, all those things that you talked about. And essentially they fall under three different categories, that environmental, that social, and the governance. So it's a lot more broad. And then so something that, I'd ask you to touch on as well is that there's the impact investing where you can, you choose something to be actively participating in versus just applying a screen to stuff that you don't want to invest in.
Yeah.
Can you run us through the difference there between impacting and screening and, what our investment committee's beliefs are?
In terms of starting off with the beliefs, so what the investment committee within PrimeWealth focuses on is achieving the best risk-adjusted returns for the end client base. Now, ESG considerations within the investment process does help to achieve this. So as a committee, we assess the materiality of ESG issues for investment decisions and then determine what impact this will make to the final portfolios. Now, I'd actually go a little bit further and say, if we think about ESG and some of the mega trends that you did allude to, Angus, around it, they certainly do have an impact on the economy, on financial markets and on asset prices. And that does tend to play out more and more over the medium and longer term. And why ESG issues have always been an important focus for PrimeWealth, one thing I will say is that as the industry evolves and as we do get more tools and information, so will our approach to incorporating ESG within the investment process. Now, look, one of the things that I think is fair to say in dealing with PrimeWealth and the directors like yourself, Angus, is that it seems that incorporating ESG into investment decision making is almost felt like a fiduciary responsibility of the business, which I think is quite powerful. Now, if we think about how we incorporate ESG into our investment strategy, now because the client base of PrimeWealth is quite varied, the needs, the preferences, the situations are different. That means that the ESG approach that we take is multifaceted or multi-layered. Now, when we think about the investment committee and how we integrate ESG into the investment process, I think the best example of that would be the way that we assess fund managers. So when we implement the advice and look to execute investments within different asset classes, the implementation of that is often through active fund managers. So looking at the ESG credibility, the credentials, and how that's incorporated into the investment processes or not of different fund managers is something we spend a lot of time on. So to go into that, Angus, and talk about your question of the different approaches to that, look, there are a few things. So first of all, there are many data points that Evidentia has access to and from industry leaders within this space, and they're quite comprehensive. So we can screen fund managers at a simple level by looking at things like their holdings in areas or products like gambling, controversial weapons, thermal coal and tobacco, and make an assessment as to whether revenues derived from any of these sources are inside or outside of our ESG criteria. And another thing that's kind of more of a qualitative assessment, just to focus on another point, Angus, is whether or not the investment manager that we're assessing has signed industry-leading certifications. And there's a few there that I'd mention. Most notably, there is the UN Responsible Investment Principles, which is an internationally based charter. And locally in Australia, there's the RIAA charter as well. And why is that important, Angus? Really, if you look at these organisations, they do lead the investment management industry in terms of the certification of investment fund managers' processes. And one of the things we tend to find is that the managers that do sign to those certifications, really do show their formal commitment to ESG investing. And there are some obligations and implications, for managers in doing so.
Yeah, great. So with that, with all the push and the mega trends coming through, there must be some data to support returns in that space, because as an investor, obviously investing in your values is important, and some people returns sort of outweighs that when you go to make investment decisions. Do you think it's a myth that sustainable focused investments, you have to forgo returns in that space, or is it too early to tell?
I mean, you could say in some instances, Angus, it's too early to tell. What I can say is that last year we saw ESG factors being a strong driver of absolute returns. So you mentioned things like the bushfire in Australia. That's not too distant memory. That was obviously associated with climate change through the pandemic. ESG factors, again, were quite well bid from the investment industry. But to answer that at the company level, there has been quite a lot of academic research that does show that ESG quality tends to be associated with lower volatility. So if you're looking at all else being equal, you could have higher risk-adjusted returns by having a preference for ESG quality. The other thing is that there is a lower beta oftentimes associated with companies that rank highly on an ESG basis, which essentially just means you're less cyclical than the broader market. Okay, so if you're in a highly cyclical or speculative rally, you could anticipate then, based on that study, that ESG factors or companies with high ESG quality could underperform the broader market. But conversely, if we're in kind of a weaker market, or we have some drawdown in a stressed event, that ESG companies scoring highly in that regard would show less variability to that kind of weakness in markets. So we have shown as well, the industry's shown that whether it's in developed markets or emerging markets, that companies now that score high on an ESG quality basis have a lower cost of capital. So if you're going out to issue debt or equity in the market, there tends to be a lower cost of capital associated with companies that rank highly on an ESG basis. And obviously, the cost of funding is crucial for companies. So I think that's another important data point, Angus.
Yeah, and when you say, cost of capital, it's going to be interesting to see what happens off the back of Glasgow, similar to what happened off the back of Paris, when all the global leaders got together and they, committed to climate change and to keeping global warming to sort of 2 degrees of where we are today. And for that to happen, I think you've really got to see a lot of government support come through. And what government support essentially means investment, right? So it'll be interesting to see where that flows through to this transition of, accelerating green energy and that type of space as well. So, I guess it's just to watch this space. If you are watching this video and you haven't chatted to your financial advisor before about different types of portfolios we run, I think it would definitely be a worthwhile thing to do. We've got something that doesn't have an ESG overlay, and we've definitely got sustainable focused portfolios as well. So happy to pick up this discussion and tailor that to anyone's individual needs. So thank you, Nick. Appreciate your time. Always interesting to chat, and we'll catch up again soon.
Thank you very much. Thanks for having me.